Mel, everybody, I'm Cantonese Cat. Hey everyone, Cantonese Cat here. I'm going to do something a little bit different here today. I want to talk a little bit more about the fundamentals of my biggest stock, individual stock position, Palantir, ticker symbol PLTR, and how it relates in terms of prices. I do want to go through my thoughts in terms of that because you cannot really just purely do technical analysis without thinking about the fundamentals, especially if you're an investor. Over the years, I have consumed a lot of content, and I've also looked at the growth of Palantir, trying to understand the business model a lot better, trying to understand what the CEO is trying to do, trying to understand where they're coming from, and what other companies are saying about their products that have been using it, and also trying to look at bear cases that really trying to see whether or not they make sense or not. The bottom line is this: when you're buying Palantir, you're basically becoming a shareholder. You're basically only a part of the company. You only really two big things. One is the commercial side of things. The other side is the government business part of things. You are talking about a very, very stable business with the government side because they've already established themselves. They spent years and years and years and years to develop their software, and their software has been basically head and shoulders above everybody else. It's gotten to the point where they're so good that they're winning contracts against some of the traditional big companies that wine and dine the government for many, many, many years. And your product is so good that you actually have the government, they have no choice but to choose you over competitors such as like Lockheed Martin. And I mean, you're really talking about you're doing something extremely right here, and it's not because the government really wants to. How do you say that? It's not really because the government wants to please Alex Karp. It's not because Alex Karp is like a great friend of the government or anything like that. If anything, I think of Alex Karp's personality, who's the CEO of the company Palantir. I think his personality could potentially rub the government off the wrong way. But if anything, I think that the government have shown that they have no choice but to use their products, which speaks volumes in terms of the advancement of the products. And there's no way for the government to actually come up with a way to come up with these software programs on themselves. And you know how the government like to spend; they can spend a ton of money, but they basically came to a conclusion where they can spend as much money as they want, but Palantirs already have the products, and the products have been very well proven. So the government basically have no choice but to use them. And more the government is aware that they have to use them, the more different governments are starting to use them. So you have a very, very stable business model, if you will, very good balance sheet, very nice cash flow. It's an incredible company that if you own, it should make you sleep at night very well in terms of their balance sheet, just because of the stability that the business is bringing. Now, with that said, they've developed this software to the point that is so well, and that you're basically talking about giving the U.S. government a competitive edge. You're talking about giving foreign governments like Ukraine a competitive edge in any international conflicts, and it's been proven over the last year or so that they're able to provide superiority in terms of battlefield positioning, strategic planning, and they're basically giving Ukraine a lot of unfair advantages, if you will. Can the same thing be transitioned to commercial growth? Can the same thing be transitioned to a lot of the companies on the S&P 500? Can they potentially give them a competitive edge using AI models, using AI to try to solve problems that are very, very complex, that are very difficult for a human head to kind of wrap their head around, that have a lot of learning potentials and a lot of very, very powerful solutions that can come off of it to give these companies a competitive edge over companies that do not use the software? You're starting to talk about something that may be indispensable, and the more companies start to use them, the more stickier it becomes in terms of its stronghold on the economy. It really, and I don't want to be like super crazy bullish about this, but it really reminds me of a situation like computers, internet, and Microsoft Word, Microsoft Office. Like, some of these things are just so fundamental that it becomes a fabric of the company's culture. And once you start using it, you realize how good the product is. You realize how great of a competitive edge you're having because you're really able to solve a lot of money. You're able to make your business run a lot more efficiently. It becomes something that could potentially be indispensable, and it becomes very, very sticky. That's the reason why Alex Karp have been saying that there's a lot more demand. He's been getting a lot more phone calls than they can handle. That's also part of the reason why they're showing on the last earning there was like 70% commercial growth in the US, which is absolutely ridiculous. Do I think that it's going to sustain over the years? Maybe, maybe not. I don't know. But it certainly seems to be in early innings of this. You're talking about, I remember looking at the earnings back in December 2022. It was just absolutely horrible. Like, there's no sign for growth. There's no sign of commercial growth at all. There were concerns that, basically this is a trash company that just went public at the wrong time. There's too much hype. There's too much excitement. There's nothing to really justify for it. And next thing you know, you're talking about 15, 16 months later, the whole story has just completely changed. It's kind of incredible how fast the narrative changed, and also how fast the CEO of different companies that have used their products have come out and saying this is indispensable. This has made my products. This has made my company run a lot faster. They're also basically holding AIP conferences to try to entice different companies to try to use their products. And there are a huge amount of interest that just keeps on coming and pouring in over and over again. There's not really any competition as well, which is kind of crazy. A lot of people compare Palantir to like Snowflake, but they're really two separate entities. Like, it's not the same thing. Like, Palantir actually provides their own very, very unique product, and I'm not sure if there's really any like competitors that can come anytime soon to take over what Palantir is trying to do for the world. Anyway, I'm done talking about the fundamentals of Palantir for now. I do want to say this one more thing, though. If you're talking about potentially 70% annual growth with commercial growth, I'm not going to be that bullish. I'm just going to dial back. Let's just say, okay, averaging it out, sometimes you're going to have 70% growth. Sometimes you're going to have 5% growth. All of this thing is cyclical, right? Let's say on average, you're like around 25 to 30% compound annual growth, right? If you compound this over the years, if you compound over 2 decades, you are talking about potential, and this is something that's just like absolutely ridiculous to think about. You're talking about a potential 200x in return. Now, you might think I'm crazy to say that. I'm going to show you something here in a second too. But if you're talking about 200x in return, market cap right now is around $50 billion. Then you'll be talking about 200x return because of roughly around 27% growth rate annually. You are talking about stock price. Maybe if you worry about like dilution, things like that, there's also potential that the cash balance is so good that they would do like stock buybacks and things like that. But let's say dilution and stock buybacks equal out each other. You're talking about maybe $4,000 a share in like 20 years. You're talking about a market cap potential of $10 trillion. I think it's absolutely ridiculous to think about. Just like when you think about $1 trillion market cap back in like just 15, 20 years ago, it was kind of like unheard of. People think you're crazy. Now we have several companies that are over $1 trillion market cap, one of which is Amazon. I'm going to show you Amazon here too. Now, before I do that, I want to get back a little bit back to the technicals in terms of what I'm kind of seeing here. So in terms of looking at the Ichimoku Cloud, which is one of my favorite indicators, you have a couple lines here. You have the Tenkan line over here, and you have the Kijun line down here. Tenkan line is basically a moving period average. It takes the high of 9 periods plus the low of that 9 periods, and then you basically divide it by two, and it come up with that line. So it's constantly moving depending on how high and low the movements are. Kijun is the same thing, except that instead of doing 9 period, it uses a 26 period. So you get two lines here. One is the Tenkan, the other one is the Kijun. Tenkan line generally serves as a resistance during bear market. Generally serves as pretty good support during bull market. You can see is really doing that, on the monthly chart over here. Kijun, whenever that crosses underneath the Tenkan, you have something called the bullish Tenkan Kijun cross, or TK cross, if you will. That generally precipitate a longer term bull trend that could last for months to years. We just had it back in January 2024. And right now, Tenkan is rising, and it looks like it's getting a little bit closer to potentially serve as support to kind of help push price higher over time. This really does look like a bull trend because Tenkan has went from downward sloping to now upward sloping and is serving as support on the way up. And you had a bullish cross over here with these two lines. All these are very promising things. I want to show you in comparison of what happened back in Amazon all the way back in the dot-com bubble. Now, Amazon is a very, very unique story because before the dot-com bubble had bursted, price have gone from somewhere ridiculous like 0.07, like 7 cents, all the way up to like over $5. So you're talking about before the bubble burst, and this is not the case with PLTR. PLTR did end up having a direct price offering around like $10 or so. The price have kind of hovering around 8, and they did go up to 45 on the peak. But you're talking about Amazon, you're talking about like 7 cents peaking all the way up like $5. That's a completely different beast here. So because of this insane bubble over here, you end up having a burst. But even at the bottom of this, compared to when it first become public, you're still talking about it went from 7 cents to about 30 cents. It had a bullish, as the price continued recovery, it did have a bullish Tenkan Kijun cross, and this happened back in December of 2002. After the cross happened, price did continue to go up for a while. It did have some fluctuations over here purely because of deleveraging and purely because you do have a crazy amount of increase in growth over here that PLTR did not have during the dot-com bubble, and that there's just going to be a lot of headwinds, if you will, because a lot of people end up getting stuck over here. They're waiting and waiting and waiting. They might end up having a lot more supply over here to sell. Interesting, the how do you say that? The resistance is actually a lot lower for Amazon compared to over here where a lot of stock has been traded in hands. But after you had this bullish cross over here, let's just do a 20-year analysis. This happened around December 2002. This year is 2024. Price has gone from close from a dollar all the way to $188. Right now, the Amazon market cap is $2 trillion roughly. It did a close to a 200x all the way from this Tenkan Kijun cross 20 years later, went to about 200x. You are talking about a company that has been very transformative fundamentally, even though it's always been trading rich in terms of the price to earning ratio. You're talking about a company that has survived the dot-com bubble. Back then, they were just a book company. They're trying to sell books online. Back in the days, there's a lot of huge speculations here that hey, they're building a very good business. They're selling books online. There's a potential that they can also expand into other e-commerce. They can sell other things as well. They could really become like an e-commerce commerce company for the internet. Like that's basically the hype over here. They're not wrong. I think they're just way ahead of their time, and I think there's not any growth or revenue numbers or EPS number really sustain that speculation, and eventually the bubble burst. But it doesn't mean that they're wrong, and it ends up being one of the better companies. It ends up beating eBay in terms of its e-commerce. It ends up actually becoming the pure fabric of life for a lot of us over the last decade or two. And on top of that, they don't just end up transforming the world, They don't just end up having their competitive edge by initially by reducing their margin and increase their revenue share, not just by providing excellent customer service for many, many, many years, but they also innovated too over the last 10 years, and they have invested a significant amount of money and effort into AWS, Amazon Web Services, and they're basically the number one cloud company in the world. They have transformed their business over the years, and they have gone about 200x as a result over 20 years. I'm not saying that Palantir is always necessarily going to do that, but we're talking about a company that has pretty good competitive edge. They have a product that's been developed for over 10 years. They have established customers, and they are gaining customers exponentially. The margin is extremely good because a lot of the software has already been developed. They're going to use that money to potentially to continue to innovate. So, what are we talking about here? Are we talking about Palantir is still working out its technicals, but we're really talking about if Palantir gets through some of the resistance that it's seeing right now, and I think it will get through that because we did have a bullish technical cross here, and it's bouncing from one fib level to another right now. It's working out its technicals. You can see some of the fib levels here of the 0.3236 and the 0.382. And the 0.5 right now has kind of just been kind of bouncing between these Fibonacci levels. It's been trying to absorb the supply of all the stock that's been traded hands up here at between 0.382 to 0.5. It's already starting to absorb a lot of that supply underneath over here. I think a lot of people are trapped over here and they can't wait for the stock price to go up so they can sell. A lot of it, I argue, has also already happened over here. So right now, you're kind of trying to get price to kind of push above this Fibonacci levels. Once it pushes about 0.5, and one would argue maybe 0.618, you're really talking about the price can go up in the next 3 to 5 years up to some of the Fibonacci levels up here at 1.618 and 2.618. As long as the company continues to grow, as long as the company continues to maintain its profitability, I think that these targets in 3 to 5 years, around 70, around 110, these are reasonable targets in terms of what it can do. I'm not even talking about like 200x in 20 years because nobody really knows that far. Nobody really can see that far, although there's always a possibility that that could be the case if they end up succeeding in what they're doing. And so far, the story is promising. If it hits around 3 to 5 years up here at these levels, it can end up staying up here for quite some time because there's probably going to be a lot of consolidation that's going to end up happening before its bullish continuation to keep going up, assuming that you continue to get a very, very decent commercial growth. Assuming that you continue to have compound annual growth rate of around 25 to 30%, I think you are going to end up beasting over the next 20 years. And there's a potential that Palantir can end up joining and becoming a $1 trillion company within 10 years. There's always that possibility. Why do I say that? I mean, first of all, they're gonna, you know what they're gonna do. You know what the government's gonna do. They're gonna keep printing money whenever they can. They're gonna keep diluting money whenever they can, and you have no choice but to put the money somewhere. You can either put the money in gold, you can put the money in Bitcoin, or you can put the money in something that is constantly growing. The reason why the government can print money and not cause any substantial inflation is because you have companies like Palantir that is causing a significant deflationary force. It is causing deflationary force in terms of making companies running more efficiently, making companies run more cheaply, saving them costs, saving labor costs. They're actually making the world a better place. They're actually saving effort. When you save effort, it brings in extra economic growth. When it brings on extra economic growth, it doesn't mean that your dollar is just going to get more worth. They're just going to print and dilute your dollar because they can. Because they need to fight this deflationary force. Because they need to keep your 401k happy. Because they need to keep people from revolting. Your money has to go somewhere. So you have to identify good companies that have decent fundamentals. And you have to find good companies that have certain technicals that make sense to you. Why do you look at technicals? The reason why I look at it is because I don't know everything. I have my speculation based on the fundamentals, based on the content that I'm listening to, based on the balance sheets, based on the earning reports, based on what Alex Karp is saying, based on what the companies of other CEO companies that are using the products are saying. These are all purely speculations. But looking at the chart also gives you one thing that is going to give you a competitive edge potentially, is to try to predict what big money is doing. Is to try to identify the trend, a longer term trend, if you will, a monthly trend, if you will. If you look at the bullish taking kitchen cross over here, big money has more insider information and has done more research than us little guys, girls, and cats. That's just the reality. How do you figure out what the big money is doing? You look at whether or not they're spending big money buying. How do you do that? First of all, you look at trend. It looks like monthly is becoming a bull trend. It looks like it's being confirmed. How do I make sure of that? You look at volume. Volume is usually being driven by big money. When the buying volume is huge, the volume is huge, you know the big money most likely is buying. When price is kind of consolidating sideways over here, you worry about whether or not they're distributing. You look at information on fintel.io and see whether or not there's increase in institutional buying, and there is. So I think this whole range right here is all reaccumulation. This is all basically just kind of price going sideways, consolidating here. And it's building some of the technicals, back testing the Tenkan here on the monthly, and allowing price to go up higher. We don't have insider information. A lot of times we have to rely on seeing what the whales are doing too. And that is not just for trading necessarily, but I think it also gives you some confidence in terms of investing. Because if you just purely go with the fundamentals, you could get very, very discouraged. You could get very, very discouraged over here. You don't know what the price is going to do. A lot of people are getting very, very bearish on it, even though the company continues to improve their fundamentals over time. And you're wondering why price is getting stuck sideways. It's because you need to give it time for price to end up eating a lot of the supply up above before breaking it up above. What do I think is going to happen? I think this could be the final frontier over here between the Fibonacci levels. You're talking about the final frontier here between around 0.5 to 0.382. And the volume shelf is also kind of telling you the same thing. Maybe even a little bit above that. You're talking about really breaking about $30 at 0.618, because that's really the top of this big giant volume shelf over here. But right now the price has spent a significant amount of time down here, even though on the way down it didn't even spend any time here at all. So I think a lot of the stock trading hands over here could already be eating into a lot of supply over here. I'll show you another chart that makes me think that that's the case, which again, completely different fundamentals, completely different set of circumstances. MicroStrategy, which is essentially a Bitcoin ETF at this point, they're a leverage play of Bitcoin. Bitcoin is very, very cyclical and it's been very, very bullish, and MicroStrategy is a leverage play for that. I would almost say that MicroStrategy has spent a long time at some of the levels down here below. Even though the majority of the stock has traded hands over here for about a year, MicroStrategy has spent about more than half a year down at these levels down below. So I'd almost argue that it already has spent a significant amount of time trying to eat into the supply over here. You would imagine naturally that this level right here at the Ishimoku Cloud, and also a lot of the price history over here around 700, you're thinking that this is going to be a very, very hard level for it to break through. And when I was looking through, I was thinking 700 is going to be pretty tough to break through. So sure enough, it tried to break through once, got rejected. Break through twice, got rejected. Finally found some support down here because it's such a bullish trend. Finally pushed price way above this strong resistance level here. It's already built up a lot of energy down here, and it was allowing MicroStrategy to really try to push out above this potentially expect a resistance over here, which again, this spent about a couple of months rejecting over here, but eventually is able to push through. Now, I don't want you to think the Palantir is like the same thing as MicroStrategy, because MicroStrategy is basically based on Bitcoin. Bitcoin has been extremely impulsive, so the move is going to be very impulsive. But what I'm trying to show you is not that, but what I'm trying to show you is I think we're close to being at our final frontier over here. I think we're close to trying to push above this 27 range over here, and the top of this shelf is really around 30, but the bulk is probably around 27. We spent 1 month touching it. So far, there's only 5 days into the month, and I think we're getting a little bit closer to the Tenkan below. And you kind of have to get closer to Tenkan, because if you don't, price eventually would suck you back into it anyway. Wait for Tenkan to go up before going higher. So I'm not really that bothered by it. I was hoping Tenkan this month would go up a little bit higher, but it didn't, but that's okay. So price could potentially go sideways for another month or two before pushing up. But once you're able to break above this level right here, I would say anywhere from like 27 to 30. If you're able to break above the 27 to 30, you might end up having some pretty powerful price exploration move going up. And that could happen in Q2 of 2024, or it could happen later on in the year, or it could even happen in 2025. I don't care. But based on what I'm seeing right now, I think it's probably going to happen sometime in the year, where you're going to eat up all the supply over here. You already had a lot of work being done over down here. So I think that up here, you're going to end up eating through the supply here over the next few months. And when it does that, price can get potentially very, very impulsive because of the fundamentals, because of the story. They're finally able to get a story together and sell it to Wall Street. They're finally able to do that. And there's finally going to be a lot more institutions that are buying in, and as they have been doing. So you're finally going to get a pretty decent fundamental story, with the technical going to be fitting of that as well. If you look at the Bollinger Bands, you can see Bollinger Band is very, very nicely expanding. The 20-month moving average is pointing up. This is a very nice bull trend that started about, I would say about like 7 or 8 months ago. And it looks like we might just be at the beginning innings of it. This thing, once it happens like that, it could potentially go on for quite some time, anywhere from 12 to 24 months, possibly longer. And if the story fits the bill, and if the big money are on board with it, which looks like it is based on the technicals, I think that Palantir is going to do very well. You keep on having these big giant green candles with these big giant volume candles over here, supporting that there's a lot of big money coming in, and with positive reactions to earnings. I think that this thing could potentially get pretty ridiculous. Now, I have a lot lower cost average. If you're just now getting into Palantir, you might have to decide whether or not this is a good risk level for you. Because if you look at volume shelf, I mean, sure, you can potentially break down here, and it's not the end of the world if you end up back testing 20. You buy it at like 23, it's supposed to buy it at 27. I mean, it's not the end of the world. I think you're going to end up having some pretty decent support down here at the volume shelf over here. It says the horizontal support over here. Is it necessarily going to go down here because it's such strong buying pressure? I don't know. There's also a risk if you're waiting for a lower level to happen, because you're trying to save $2 or $3 per share, because you're reading a bunch of stuff out there saying, oh, this is a way overvalued company, the PE ratio is just out of this world, then I don't know what to tell you. You might end up buying down here, but when it gets to 20, you might not buy anyway. So I'm not here to give you any financial advice. I'm not here to tell you what to do. I'm just basically telling you how I think. When I say you should do this, you should do that, what I'm really saying is I should do this, I should do that, if I were you. But I am not you. I don't know what your financial situations are. I don't know what your risk tolerances are. Palantir can go up and down 10% in a day, like a walk in the park. Like, this is not Bitcoin miners. This is not cryptocurrencies. But this is an individual stocks, and being invested in individual stock is risky, because there's never any kind of certainty. There are always changes that can happen to a company. You never know. It's always good to keep up to date when you're investing in an individual stock. If you're trading a move, that's a different story. I like to talk a little bit more about the technicals, but it's been 30 minutes. I would like to, just offer a unique perspective from the fundamental and technical analysis in combination in terms of what I think about Palantir. I may make a video about Palantir in terms of short-term price action, but I'm probably going to end up just making a bunch of posts on X because those things are not as conceptual, and videos are a better conceptual form to kind of describe to you what I'm actually thinking behind the scene. Meow meow. Thank you for listening. Have a good one. Bye.